Good afternoon, or maybe even good morning if you're in the same side of the world as I am. Good evening if you're joining us from the east. Good to have you all back again on Vesper's bi-weekly oils webinar. It's our effort to keep you updated on everything that's happening within 30 minutes, and there's a lot happening. It's day 18, I think, of the Middle East conflict. It's continuing. I haven't seen a let-off yet. So I think there's a lot to discuss, and where in the past weeks a lot of what we discussed was maybe more biofuel mandate related, all of a sudden we're going back to traditional fuels for a lot of what's happening these days. Of course, you're joining me as a host, but the person you actually want to hear from is German. German, our oils analyst. Thank you so much for joining us once again. Tell us, crazy times. Might be still a few days later.
Yeah, no, it's indeed a very rough time for the global trade, commodity markets, and overall, I think it's what's happening is bad for people's lives. But we're here to discuss commodity markets, of course. If we narrow down the focus to the impact of the conflict on the vegetable oils, the key impact comes, of course, from the key impacts come from the Brent price and logistics, right? So I'm not going to tell you about the importance of the Strait of Hormuz. I've seen that there are so many articles on the web explaining this. I think you've seen it, but it's basically 20% of the global energy, like related oil trade coming out of the place. And what has been happening that Iran announced not the closure, but kind of closure of the Strait of Hormuz, because it said that maybe friendly countries, they should feel safe sending their vessels to it, whereas unfriendly countries should not do that. And what happened, basically, some of the vessels got attacked, and this, of course, was very scary for the markets, for the energy markets, and then it filtered into the other commodity markets. Also, Gulf countries like UAE, Saudi, Kuwait, Bahrain, they get attacked, and attacks also, some damages occurred their oil infrastructure. That's another big driver for the Brent crude oil price. And as I also said, the impact is also on shipping because of the rerouting, because of the cost of the fuel, cost of the insurance, etc., etc. So shipping also, the logistics becomes more expensive and more, let's say, and there are delays that take place. So logistics becomes less reliable. So these basically things that we do see. And if I'm being specific about the Brent price, I'm just going to share my screen and go to the futures and choose Brent. By the way, we changed the design a little bit of the widgets, and now you need to select stuff on the right-hand side. And if you want to expand the graph itself, you can just click on this button here, and then it will slide. So yeah, this is our Brent crude oil price, and as you can see, it's been quite volatile. And of course, the first reaction was the increase of the price due to the fears. Then the Twitter trade, so to speak, came into play when, for example, the US president said that the conflict may end soon. That was the first thing. And the second thing that drove this decrease, I'm talking about this decrease here, the second thing that impacted it was the news that some oil reserves could be released in the US and also potentially in other G7 countries. But then, of course, after that, prices started increasing again, as you can see, and that's because of intensified attacks on the vessels in the Strait of Hormuz and the continuation of the conflict. So, long story short, Brent has been very volatile, going up and down, but now primarily staying up, and that's because of the reasons that we discussed, and that's of course impacting vegetable oils.
I think that's the main question our viewers will have today. I think Brent, it's great to see that's the origination of course, what's happening, but the actual implication for vegetable oil prices overall, Is that also, if this happens to Brent, is the trend then also going to be that all of the other ones also grow continuously?
Yeah, that's a good question, because of course the key connection is through the biofuels. As we all know, vegetable oils, they are used in large quantities to produce biofuels. And when Brent crude oil increases, it becomes more economically viable to produce biofuels. So the demand for vegetable oils increases along with the increase in Brent crude oil price. That's the key connection with the vegetable oil markets. But getting back to your statement, it's not necessary that oils, I mean, I would say the reality showed us that the continuous growth has been seen so far only in the palm oil. Yes, I'm gonna choose palm oil now to demonstrate this. Whereas other oils, they showed slightly different trends, which we will touch upon later. So as you can see, the conflict started on the 28th of February, so on weekend, and since then the price increased massively for palm oil. I think it's, basically a few years record at the moment. And so, of course, as I said, biofuels is the key connection point with B50 topic is being discussed again in Indonesia. And basically speculations and rumors going around that Indonesian government might implement B50 earlier than they anticipated, which will mean more usage of palm oil domestically in Indonesia and less availability for export. This is one of the key things that's supporting palm oil prices now, and other drivers that are helping palm oil price include some of the bullish numbers for Indonesia. So basically, GAPKI published very strong exports in December and very good stocks, which means that this tightness in stocks can basically could prolong into January and February. And when it comes to Malaysia, we saw quite some strong growth in exports in the previous 2 weeks. And that's because, for example, Southeast Asian buyers, for example, India, they prefer palm oil over other oils at the moment because of the logistics. So Malaysia and Indonesia, they're closer to India than, for example, Argentina, which sells a lot of soy oil to India, or Ukraine or Russia who sell a lot of sunflower oil to India. So it's logistically, it's more convenient now to import palm oil for the Asian countries, less logistical risk. And because of that, nearby purchases increase significantly, which is also helping palm oil benchmark.
Okay, well, so I think product one that we checked after Brent shows quite a similar pattern, very bullish over the past weeks. If we then transition to soybean oil, what's happening there? Is it the same direction?
Yes, let me, not exactly, almost, but let me show you the chart. Let's go to the soybean oil CBOT. Sorry, as some people call it, CBOT or CBOT, of course. So as you can see, there has been this continuous growth even before the conflict, but recently this correction did take place, and the reason for that was the fund liquidation and the bearish sentiment in the soybean complex.
If it's internet.
Did I?
Yeah, sorry? You froze for a little bit, but I think you're back. We're still at the beginning of the dip we see on the screen.
Okay, great. Yeah, so this dip basically happened due to the fund liquidation and some bearish news related to the soybean complex, which are the potentially delayed meeting between the president of the US and the Chinese president, which people think could negatively impact the purchases of US soybeans by China. Overall, not good looking U.S. exports of soybeans into China and just general. And this all creates a risk that the United States might end up with large ending stocks of soybeans, even despite the despite the biofuel policy. These are, I think, the key reasons for this drop. And also, of course, the market is monitoring the situation around the biofuel policies. And the US promised to finalize them by the end of March. Now we are, in the middle of March. It's still 2 weeks left, but I think the market is a bit nervous that the finalization of the biofuel policies could be delayed again.
Well, I also always did all my homework last minute, and look where I am now. So let's see what happens with 2 weeks left to the deadline. And then if we transition to the decision on Brazilian biodiesel mandates, they were postponed to this week. Is that correct?
Yeah, exactly right. So they were initially planned for the 12th of March. And for those who don't know, the context is that Brazil was planning to discuss the increase also in the biodiesel blended mandates from B15 to B16, and also to discuss the new import rules for biofuels. But the review has been, again, indeed postponed to this week, I think 19th of March. And what was also interesting to find out that the biodiesel industry organizations, they are pushing for the idea to increase the biodiesel mandate, not even to B16, but also maybe to B17. So not by 1%, but by 2%. Yet, for example, to battle fuel shortage. That's, of course, the key argument that biofuel guys now around the world are using. They say we want to help to battle the fuel shortage, which I think indeed should help, depending on the region. But potentially, this also could be reviewed this week, the larger increase. And if it does take place, then it will be supporting for the soybean oil prices. And if it does not happen, it could be, maybe mildly bearish for the soybean oil benchmarks. We need to see.
Yeah, we got a really good question. I think it's a really interesting one, but it's the question about what we should anticipate for palm oil, but also the other veg oils, if Brent crude is at $100. It's an answer. Do you want to give it at the end of this of the episode, if we've gone past through all the veg oils, or do you want to do it now?
Yeah, but you see, Martin, the price of Brent is already around 100. So that's where we are at the moment. But I think we should also not remove the supply and demand factors, which we'll touch upon later. And we need to see the picture together. Of course, Brent crude oil price is a strong driver. But if fundamentals, let's say, too bullish or too bearish, then it might have even stronger impact on vegetable oils. So I would say maybe, the topics that we might touch upon later during the webinar, I think they might help with the answer to this question.
Then in that case, we're going to make life harder. We were in Brazil. We went back to the Middle East for a little bit. And now we're back in Brazil, because what you just said is that the Brazilian decision on biofuel policy could support Latin American soybean oil prices. Am I correct? And
yes, correct.
Yeah. And if we then transition to rapeseed oil, what is your outlook there?
Yeah, let me share the rapeseed oil chart. I'm going to go to my rapeseed oil dashboard and open the FOB Dutch meal price. So as you can see, the price peaked on the 9th of March at around 1,136 euros per metric ton. This is MJJ price. And since then, the decrease took place. And that's why I said at the beginning that not all oils follow the same trend. Of course, initially they all increased, but then the direction that they took, let's say last week, since last week was different. So rapeseed oil price got impacted by the decrease in CBOT, basically Chicago soybean oil price, but also the strong decrease factor was the news that the 2026 rapeseed production globally can be very strong. That was kind of expected already for a couple of months. I heard some of the numbers for Europe, but now I think Oil World recently reported that global production could reach around 86 million metric tons compared to 85.6 this season. And this season, for example, the production is already quite comfortable. I mean, overall supply. And we'll probably end with higher, I can imagine, Canadian canola stocks. And then next season, which is starting July this year, will bring us strong production. So which gives us overall very comfortable supply picture for the rapeseed and canola. And of course, yeah, referring to the question of Martin for the Brent price, you can see that even though Brent is now at around $100, and it's sometimes, yeah, depending on the part of the day, increases by maybe a few dollars more, you can see that rapeseed oil still took a dive because of the very bearish supply news, right? So it's not that easy. But of course, if Brent does continue increasing, let's say, and I heard worst case scenarios at around $130 or around $50. I think it's these are worst case scenarios. I'm not sure if they could be possible, of course, but it needs to be very bad in relation to the oil infrastructure damage, etc., etc. So of course, if Brent continues increasing strongly, then rapeseed oil, of course, will follow. But in this case, yeah, the bearish fundamental related to the supply prevailed for the rapeseed oil.
So it sounds like it's important to keep a good eye on what's happening with Brent, as it does have impact, but it's very important also to keep looking at the fundamentals for each individual product. And where we see with rapeseed, we're currently on, a very comfortable supply, you just mentioned. If we then transition from rapeseed over to sunflower oil, what is happening there?
Let me go to the sunflower oil chart. Yeah, you can see also pretty much similar line dynamics here. So yeah, similar story. Oil World announced, and I think, yeah, other regional agencies, they did this per country, but Oil World provided a global picture that, yeah, we will expect very strong sunflower seed production in 2026. So I think the number that they said is 62.3 million metric tons compared to 56.5 this season. And this increase, yeah, is driven by expanded acreage in Europe and non-European Black Sea countries. And of course, yeah, depending on the weather, we might end up with a very strong 2026 crop. And of course, yeah, such news along the news related to the rapeseed complex, they had a similar impact on sunflower oil, which was already quite overheated, which was already very expensive, and people were buying less of it, and maybe it's even buying, let's say, more rapeseed oil than sunflower oil because of the sunflower oil premium. But in the overheated market, such news about the bearish supply, they clearly brought some of the relief and eased the prices, as you can see.
Okay. And then next is that the Argentinian supplies should be arriving in Europe. Is that correct?
Yeah, it's already arriving, and people, I'm sure, saw a lot of news on the discharges of Argentinian sunflower in Bulgaria, then some news related to the inspections. That's I'm not going to repeat that. So based on our vessel and up data that we received from Argentina, I think since January up until now, it's been around 360K of sunflower that left Argentina. Vessels already sailed compared to 30K last year. So basically more than 10 times more than the previous year. And I think for the October-February shipments, I think since the beginning of the season, if we take not just from January up until now, but also from October, the shipments they are over 400K. And I think some estimates were published that throughout the whole season, shipments from Argentina can exceed 800K, right? Which is a lot. It's a lot of sunflower. It's a big relief for Europe and Turkey that really need that. And this will help the crushing activity, so more oil will be produced. But in addition to that, we see that, of course, Europe is crushing more, but also Ukraine and other Black Sea countries, they produce more sunflower oil, and they have more in storages, because if you remember that what we discussed previously, exports from non-EU Black Sea countries were very slow in the first part of the season, and that's basically caused caused the stock accumulation for sunflower or sunflower oil, depending on the country. And then with the arrival of the Argentinian crop, there will be probably more incentive to give a discount to those stocks and sell them. So there is an expectation that the supply in the second part of the season will be better, and then prices should get lower for sunflower and sunflower oil. But again, as we discussed previously, if Brent reaches 130, 150 from current 100, then it will be again a different story. But removing the Brent factor, or let's say thinking about potentially the end of the conflict, what will be happen after that, then these supply factors will, of course, play a big role for the downward trend.
Okay, well, clear. Another market where it's important to look at two pictures at the same time. If we then transition over to the lauric oils, can you give us some insight on what's happening in those markets?
I can see a question which I think was sent privately, which is fine. Doesn't matter how people do that. I can see the question. What about the recent shipments that were rejected in Bulgaria because of the pesticide levels? I read the story, and I think they were accepted for the biofuel production. So it's still, it doesn't count to the supply of the food, but still, if you consider together food plus biofuel as the one pool, then the demand still became, stronger with these two shipments from Argentina, right? Even though the sunflower and oil produced out of it cannot be used for food, it still can be used for biofuel. So I wouldn't say that those news were, for example, bullish, or those news were giving a hint that the supply is still tight. No, I think the supply is still a supply improvement situation.
But I think a very good addition, and very happy that people have found the chat. So any questions, please feel free to send them to us, either privately or openly in the chat. We were just transitioning into lauric oils.
Mm-hmm. Yeah, let me then open the chart. So I'm going to go to my lauric dashboard, and then I want to show Lomoa coconut oil. I think it's for some people it could be more interesting to see that we have Lomoa and not just normal paper market coconut oil. So as you can see, for the lauric oils, for coconut oil specifically, the trend is clear upwards. I would say that's just they look at the overall direction, especially at the direction of palm oil, which is still strong, and it helps lauric oils to grow in price. But the situation with the deliveries to Europe, I think, could be a bit tricky with vessel availability, with more expensive logistics, etc. That's the logistics part related to the lauric oils, because Europe, of course, doesn't produce coconuts and palm kernel itself, but it does produce, for example, rapeseed or sunflower, which for which it has domestic supply. But for these products, they purely come from the Philippines or Indonesia or Malaysia. and the transportation difficulties, they could impact the deliveries to Europe now. So I would say people are trying to sit on the stocks for as long as they can, right? Or buy, let's say, only a little bit for the nearby needs because people don't want to pay high prices. I think what I'm saying, it concerns not only lauric oils, but all oils that people try to buy hand to mouth and not jump into close big deals because everybody hopes for a quicker end of this conflict. Not sure if it materializes or not, but with the coconut oil, yeah, the story is the same, that people buy hand to mouth. And what's interesting happening in the Philippines now, that the government is discussing what to do with biofuels, because in the Philippines they produce biofuels from coconut oil, which, yeah, is quite expensive feedstock if you think about it. And the government is thinking to ease the barriers for the imports of the biofuels into the country, even though local biofuel producers don't like it. The government said that we want to keep fuel prices under control and also make sure that food prices stay under control, because, yeah, coconut oil is increasing because of the need to blend more biofuel within the Philippines. So the government has two tasks: to make sure that fuel prices are under control and that food prices are under control, because coconut oil is actively used for cooking in the Philippines. So that's why I think the government already, I think the lawmakers already passed the bill. And the bill, I'm not sure if it was certified or not. I think it was certified, but I need to double check. And then we need to see how the local biodiesel market will respond to it. There are also suggestions by the local biodiesel groups to increase the blending mandate so they can produce more biodiesel, and this way to, let's say, close the gap related to fuels. But I think the government is concerned about the food prices. So I would say we still need to see how the situation with the biofuels within the Philippines develops in the near future. And regarding the crude palm kernel oil, let me go to this widget. Yeah, so here I'm showing our RSPO SG price for crude palm kernel oil CIF Rotterdam, and you can see there was a jump last week clearly, and that's, yeah, mainly related to the increase in crude palm oil and coconut oils.
Okay, so there's a big balance there between fuel and food going on, a difficult one to keep track of. If we then transition maybe to the last oil that we'll cover today, that's olive oil.
Mm-hmm.
What's happening in the markets there?
Yeah, I would say olive oil is the least affected oil by the conflict and Brent crude oil price surge. I'm just gonna go to our price comparison chart, and then I'll show extra virgin price. Yes. So this export Spain Vesper benchmark for extra virgin olive oil. As you can see, it rebounded a little bit last week. And as you can see, since the start of the conflict, and the conflict started on 28th of February, there wasn't any significant reaction of the olive oil market to the events. That's because, yeah, olive oil is not used for the biofuel production. And also overall, olive oil lives within the premium market and lives, let's say, a bit of a separate life from other oils. And in terms of the key events that we see now in the olive oil market is, of course, the slower production of olive oil in Spain this season, which does not necessarily mean there is a shortage, but rather means that the production is returning to normal, because last season, the production was very big. But this year, let's say the production is not as big, but still enough for the market. That's why you don't see prices skyrocketing. You see that the prices are still higher on the higher levels, but yeah, for example, even in December last year, they were significantly higher. And that's explained by still good availability of olive oil in Spain. And secondly, good availability of olive oil in other countries, including Italy and Tunisia. And Italy, for example, speaking of Italy, they, I think, have very good stocks at the moment. I heard that their February stocks are 40% above the levels, I think, February last year or previous month at least. I need to refresh my memory, but these stocks are looking as sufficient in Italy. So overall, there are some factors that do support the prices, as you can see, the factors related to the lower production this season. But as I said, the key point that the production is still enough for the market. That's why nobody's worried, and that's why prices are not skyrocketing.
Okay, well, I showed the link to your latest report on the dashboard, which includes outlooks for the entire market. I would like to thank you all for joining us. I think an important takeaway for me from this is that despite the upward pressure coming from the Brent crude prices, it is very important to keep looking at all of the individual fundamentals for each product, where we see wildly different movements. We see palm having a big upward movement still due to B50, while other products might see big supply coming and are being now kept on higher price levels due to the conflict in the Middle East. So also interesting to keep track of, hey, what if that app ends? What will happen? But also the scenario on the other side, I think, which German explained, is, okay, what happens if oil prices go, so Brent price go even higher? So a lot happening. German, you will be keeping coverage.
By the way, Paiko, just to add to what you said on various scenarios, we produced a paper which basically indicates what levels vegetable oils can reach based on various Brent levels. We've got this on LinkedIn. Do you think if I share with you now the link to the LinkedIn post, can you publish it here? I'm just thinking.
Yeah, we can add to the chat, and also be made available in the email to the replay that comes afterwards. I will add it to that as well, so you can find it there. Maybe that's easy.
Yeah, let me send the link now to, shall I send to Q&A? Yes, yeah?
To chat is better.
Chat is better. Okay, public. I'm going to send to public. Can you see? Okay.
Yeah, perfect. German, thanks for the quick move at the end there, going to your LinkedIn. Thank you all for joining us. We'll be back in 2 weeks' time, and we hope to see you then once again.
Thanks, Faiko. Thanks, everyone. Bye-bye.
Thank you. Bye-bye.